Hi there, and welcome to All About Money. I'm your host, Dhruv Tikekar. And this week, we're going to be returning to the hotel industry here in Hong Kong. We'll be doing this through the lens of a report that was released by property consultancy group Colliers, which not only examines how the sector has been faring during the pandemic, but also how it's expected to perform over the next 5 years. Well, joining me now to talk about this is Shaman Chellaram. He's the Senior Director of Valuation and Advisory Services in Asia for the company. He's also one of the lead authors of this report. Shaman, thank you for joining us.
Hi, Dhruv. Thank you for having me on the show today.
Oh, appreciate your time. Now, the report is pretty broad in its scope, and among the things it looks at is among some of the things it looks at is the hotel supply chain, the hotel supply rather here in Hong Kong. But you're also looking at a very particular timeline, and the cutoff for that timeline is 2026. So why look at this period in time?
What we wanted to do was actually show the Hong Kong hotel supply chain from a 10-year perspective. So looking at 5 years previous, and then looking forward for the next 5 years. And what we can see is in the previous 5 years, hotel supply had grown roughly about 14% to close to 87,000 keys is where we sit at the moment, around 315 hotels. And what we see is that will grow about a further 6% until 2026, taking us to around 334 hotels with just over 92,600 guest rooms or keys, as we call it in the industry. So we wanted that period of time to show a good 10-year range, and in line with the figures that are published by the Hong Kong Tourism Board as well.
Now you do talk about the growth of the sector, but one of the things that does stick out when you open the report is this big bar graph that charts the 2016 to 2026 volume of hotels. And while there seems to be a steady increase in hotel supply between 2016 and 2021, there's obviously an upward trajectory. When you start to get to every year following 2021, the marginal difference seems to be getting smaller and smaller. So I just wanted to know, why are we seeing that? And how much of that is a consequence of this post-pandemic era that we're living in, versus it being a land problem, for example?
Yeah, it's a very good point, and I think there's a few different answers to that. Number one is there's less sites in Hong Kong available for hotel development. And then when we look in the private market at the commercial sites that are available, most developers tend to prefer developing or redeveloping those sites into office buildings rather than hotels. Hotels is traditionally a much longer term investment, a much longer term payback as well. So that has a very a key impact really on how people view the future demand of the hotel market. With that said, obviously the recent pandemic has had an effect on the market, and people have slowed down. We've seen, hotels like the Excelsior, for example, that's been torn down to create a beautiful Grade A office building. So some supply has been taken out of the market, and naturally, with what we've gone through in the last 2 years, so there is some nervousness around how quick that will be able to come back in the future. But the view from most hoteliers taking a long-term view is that they're very bullish on the Hong Kong market, and that's why some investors continue to do so. But it is a combination of lack of suitable sites, cost of development, and some of the pandemic issues that we are facing.
And one of the trends you do touch on, in the wake of the pandemic is this increase in differentiated offerings from these hotels. Examples like staycations, and other packages, extended stays, for example. Could we start to see that tapering as we return to some form of normalcy, as the world comes back from the brink of this pandemic, or has that line been permanently moved and our hotels embracing this more on a war footing now?
I think the latter part of what you just said is very true, and I think staycations have been around for ages, and hotels have always looked to reinvent new packages. The pandemic obviously accelerated that, and with Hong Kong being such a tight domestic market, hoteliers have really had to been extra creative really to develop new ideas in the space. So I see that as here to stay. And obviously the extended stay market is something that hoteliers have had to pivot towards during this time to fill a bit of a gap, in the residential market, but also to help boost occupancy in the hotels. And that will be here to stay, but as demand starts to pick up from normal hotel business in the future, then we'll see a lot more hotels refocus back onto their nightly stays. So it's a little bit of both, but I'm definitely feeling that the trend is here to stay rather than it will taper off.
Well, speaking of extended stays, I mean, there's also the issue of the government announcing this year that some 150 hotels are to be used for transitional housing, for example, meaning people will be moving into these arrangements while they're on a public wait list for possibly years now. What does that mean for these hotels? I mean, how does that impact their licenses? Because they're essentially serving a different purpose to some degree now.
Absolutely. And, the government is looking to try and solve two problems here. One is obviously the a large amount of people on the public housing rental list. And the second part is obviously the lack of operating performance in some hotels. So it was a natural way to try and address the problem by using spare capacity in hotels and in guest houses to really fill this void. And we know Hong Kong has a housing problem, and this is one way to fill the gap. We'll provide some cash flow in the interim to the hotel groups that do participate. And more importantly, I think for the people waiting for a home, it does provide a bit of accommodation needs that really they would appreciate.
This pivot away from tourism, though, I mean, is that likely to hurt some of these hotels' identities, perhaps identities that they've constructed over many years? It's like being maybe a bastion of tourism in the city.
Yeah.
Is that at all going to be affected?
I don't think so. I think this is the government is looking to address obviously an interim need, and when these hotels, once they fulfill that need for 1, 2, 3 years, they'll then probably go back to being a hotel. So I don't see it as an issue. In fact, it provides a bit of cash flow and a bit of operational experience. And you don't also need to fire as many staff as you may have done if you were in a very challenging environment. So it should create, it should create some energy within that sector and at least service a need for the moment.
You talked about creating job opportunities and staffing, but the issue of a shortage in staff, or at least companies shedding their staff, has been a key component of your report as well. The report mentions that in the last 2 years we've seen a significant drop. This, in some sense, strangely stands at odds with a growth in the performance of these hotels. Do you see that as an oddity, or am I, as an outsider, just looking at it and going, oh, that's a bit odd that we're seeing this growth while they're shedding so many workers?
Well, I think if you look at the beginning of the pandemic and over the last 2 years, hoteliers have had to shed some staff, and many have tried to keep as many staff as they can, but in some cases that's not possible. Now, that talent from the industry has actually moved across, some of it has moved across to other industries. So it will be very hard when the hotel sector starts to ramp up again. It's actually going to be quite hard for hoteliers to find enough staff to come back into the business. So talent retention and talent attraction is going to be a very key component and a key challenge that Hong Kong faces, and to be honest, many other global cities also face within this sector. In the short term, we've seen performance improve from last year's lows, but hotels still continue to be very operationally minded, manage their OPEX in a very, very stringent way at the moment because they have to. And that means you're trying to provide the best level of service with ideally an optimal level of staffing, but you're probably not going over and above the needs. But as you start to expand that and Hong Kong returns back to normality, one of the things I'm hearing from hoteliers is that it will be a challenge to then re-attract staff to then get Hong Kong back to the level to where it was. And that's something that we need to start addressing early. And some hoteliers are already on recruitment drives as they plan for the future and for new hotels.
I mean, speaking of shedding workers during the pandemic, was there in some sense a misconception around there being a readily available pool of workers that hoteliers can pick from, say business does go back up again? Has there been that kind of misconception? Is that why we're seeing them, being able to shed workers so easily, or what exactly has been the driver behind that?
Yeah, I don't think it's been a misconception. I think for many years, the F&B industry, the hospitality industry has struggled to find enough talent and enough staff. So this is something that was already going on pre-pandemic. Obviously, with the pandemic, that then accelerated the problem in the sense that many of those jobs were shed, and some of that talent may not want to return back to this industry. And often staff in the hotel industry do work long hours. Sometimes the pay, depending on who you're with, might not be the best, especially for some of the lower or mid-end jobs. So that can also be a challenge. And the last 2 years, we've seen a lot of people have to go and reinvent themselves and find other roles. So bringing them back in, hopefully the industry can do it. I'm optimistic we can do it, but it will take time, and I think it takes a collaborative and collective effort.
Speaking of reinvention, I mean, the mid to high scale, the mid to upscale hotels rather have been able to weather this storm a lot easier than I say, for example, the smaller boutique hotels. What hurdles do they have? What do these smaller hotels now have ahead of them in order to be able to catch up with these bigger hotels that are able to not only cater to government needs, but also, have their own staycation packages and, offer different services alongside existing, requirements on them?
Yeah, for the low end, sort of the lower scale hotels, sort of 3-star and below, it's been challenging because there's no tourists coming in, and you don't have, large busloads of tourists and a lot of international overnight stays coming in anymore. And a lot of them drove their business on that basis. What they've then done, a lot of them, is pivot to this extended stay model that we've talked about. And in some cases, I was with an operator yesterday, they're getting occupancies that are very, very high, maybe sort of 70, 80, 90% even at the moment, but the rate is much lower. Maybe you're hovering at between 300 and 400 Hong Kong dollars a night. So at that level, there is still a struggle, but operationally, they are still able to stay afloat and do okay. At the mid end of the market, we have seen some movement, and obviously new staycations coming out. That's done well. But at the luxury end, weekend demand is strong, but probably the midweek demand is less strong. And their occupancies, as you would have seen from the report, their occupancies are actually lagging behind the rest of the market, but they're able to make it up a little bit on rate and combining different packages as people in Hong Kong can't travel anywhere and look to have some different experiences.
Shaman, obviously a lot more to get to, but we do have to go to a quick break, but we'll be right back.